results right. Hopefully, this is something that you will find useful as well in your own business decision making. Okay, so what are we going to look into today? First off, I'll cover what is called the Greater Manchester Index. The Greater Manchester Index is the single most important economic indicator for our city region. I'll touch upon business confidence, domestic demand, overseas demand. Some of the results are broken down by sector, so there is an element of sectoral analysis, and then finally labor market and some outlook for the future. What is the Greater Manchester Index? As I said, it is made up of QES measures. It is the single most important economic indicator. It's a composite indicator made up of those 7 measures. So it covers domestic demand, 2 of them, international demand, again 2, confidence in turnover, confidence in being able to maintain profits, and then capacity utilization. All very important macroeconomic indicators make up the Greater Manchester Index. Okay. So what is the economic context that we conducted the survey in? So just to sort of remind you, this is where we were in June 2021 when I published the second quarter's results. At that time, the Greater Manchester Index was at 30.4. That was a significant improvement from the first quarter of 2021. We expected GDP to grow by between 4.5% to 5% in the second quarter. That was based on the QES results, and bang on, the UK GDP did grow by 4.8% in the second quarter. So this is what I mean by saying that the QES results are very accurate, very representative of business views, and hence useful for macroeconomic analysis as well. We did say in the QES in the second quarter that employment prospects are up, and the unemployment rate actually dropped to 4.6% at that time. But compared to pre-pandemic levels, collectively, the number of hours worked in the UK is still about 45 million lower than it was in Jan-Feb 2020. So we are below pre-pandemic levels, but significantly up, compared to a year ago, or even compared to January, February 2021. So that's the good news. That was the context under which this survey was commissioned. So what are the key findings in this quarter's results? And I think the single most important theme for me coming out of this quarter's results is a stabilization in business prospects. So we have had a rapid increase in activity in the second half of the first quarter and pretty much all of the second quarter of 2021. That good performance is continuing, but there are some pressures building, which I will get into later. But overall, there is some stabilization that is happening. Now, we don't usually experience annual GDP decline of 10% or then an annual GDP increase of 10-11%. That's not usually what happens. We have normal stable rates of growth. I think we are entering that territory now. So in summary, there has been an improvement in customer demand. Manufacturing and services were benefited. A slight decrease in construction activity. I'm not particularly worried about that. We'll look into it later. International trade activity has picked up. There are some Brexit challenges that remain, but UK exports have increased in this quarter, and Greater Manchester Northwest exports have also slightly gone up. So there is good news on international trade activity. Cash positions remain stable, but they have not recovered as much as customer demand has recovered. And again, on cash positions, there are some demands now. Debt repayment is due. Deferred tax liability is probably going to start become payable very soon. So we do have some pressures building on cash positions. Employment prospects have also improved in this quarter. A record number of vacancies, and a significant increase in the number of businesses. So business leaders and managers like yourselves trying to recruit staff. So I will be keen to hear your anecdotal feedback about the largely reported labor shortages and how that is impacting business. But at the same time, there are also recruitment difficulties, and we had some additional skills related questions in this quarter's survey. And so 2 things came out as the key barriers for smooth recruitment. One was the lack of job specific skills, and the second was the lack of soft skills. So those are the 2 main reasons that stood out. But of course, that varies by sector. So in construction and manufacturing, probably it was the job-specific skills that was a barrier, but in professional services, soft skills was identified as the main barrier. And then something to bear in mind, not directly related to the QES, but one that will impact business performance. 68,000 workers in GM were still on furlough as on the 31st of July, 2021. That's the latest date for which we have data for. And the national number, the corresponding equivalent for the whole of the UK, is 1.56 million. That is something to bear in mind, because in 48 hours, the furlough scheme, the coronavirus job retention scheme, is actually coming to an end. So what that means for employment is something that remains to be seen. But good news on employment prospects in this quarter. So the headlines now, the Greater Manchester Index, and the good news on the Greater Manchester Index is that it has actually gone up again in this quarter. It now stands at 31.9. That's a 1.5 points increase compared to the previous quarter, when it was 30.4. So based on that, now this is not as sharp an increase as we experienced in the second quarter or even in the first quarter. So what we expect is that UK GDP will increase by between 2.6 to 3% in Q3. And that seems to be the consensus figure from other commentators as well. But here is something to bear in mind. Most of the growth that we have experienced in 2021 has been consumer demand-led growth. So a lot of the activity was spurred on by B2C, business to consumer sectors. And to an extent, the B2B sector was not as badly affected as the B2C sector was because of COVID disruption. So we have seen that consumer spending has gone up with the relaxation of retail and hospitality, lots of shopping, lots of visits to restaurants, bars, etc. That city center is now back to normal. If you come here during the evenings, it is as if it was on any day before the pandemic, and the same situation in the weekends. So we have seen that consumer demand has actually gone up. That is what is spurring economic growth at the moment. But business investment in itself is lagging behind. And so what we have seen is a slight softening in the rates of growth. So do bear in mind, retail sales went up in April, it went up in May, it then started declining slightly. So in August, retail sales actually went down. It also went down in July, I think by 2.8%. It went down slightly again in August. So what we have seen is that as the amount of money that consumers are spending has tailed off, the rate of growth in the economy has actually started softening again. So that is what I mean by stabilization in economic activity, because consumer spending is largely the result of pent-up economic demand from not being actually able to take a holiday or visit a restaurant, etc., for pretty much all of 2020, even the beginning of this year, and then accumulated savings. But once we have spent accumulated savings and have had the holiday, that there is not enough capacity to spend more and more. So on that basis, what I expect is that the UK economy will reach pre-pandemic levels only in 2022, probably the first quarter, maybe the second quarter, assuming everything continues as they are at the moment. However, what we are likely to find also is large geographical variations. And as we know, in the Northwest, we have a lot more restrictions. We were the first to go into regional, local lockdowns, etc. So that could affect how different regions of the UK start recovering in the next quarter and the quarter after that. So we are likely to see geographical variations, but overall national picture, we might reach pre-pandemic levels in the first or the second quarter of 2022, assuming things do go on as they are now. Okay, let's get into the component parts of the QES now. So first up, domestic demand. And what I have done is to split the data according to the 3 sector groups. Two things to bear in mind. I do not split the data by individual service sectors. I group them into a services sector group. Manufacturing is manufacturing and production, and then construction is a standalone sector because it doesn't necessarily fit into either of the other 2 groups. And construction is an important sector for GM. Just look at the number of cranes in and around the city center. There's a lot of construction activity taking place. It is an important sector, but do bear in mind, 80% of Greater Manchester's economy is services. So unless we have serious service sector growth, we're not going to see overall economic growth in GM. That's a point that I've been making again and again. Okay, so what is the sectoral picture looking like? Good news on domestic sales and domestic orders. For both manufacturing and services, we have actually seen domestic sales go up. They were in the mid-20s in the previous quarter. Both of those balances have now exceeded 30. And the good news, particularly for manufacturing, indicative of a very strong rebound in manufacturing sector activity, is that the balance relating to domestic sales for the manufacturing sector is now in the mid-30s. That's the highest it has been for more than 5 years. For more than 5 years. So manufacturing sector rebound does seem very strong at the moment. Services, again, doing well. The service balance is around 31. That's, again, a good number. It is very high. The only recent quarter in the last 4 or 5 years that it has been higher than 31 was in the first quarter of 2020. And we had that post-election glow in the economy before the pandemic set in, of course. So service sector growth is also very strong. You know, things are getting back to normal. It would seem that is not to mask or downplay the other problems that we have in the economy, but at this moment, according to the QES data, things are looking okay for manufacturing and services. We've had a slight decline in construction sector activity. For domestic orders, again, it's a similar picture. The manufacturing balance is more or less stable. It was 19, it is now 17, roughly the same, the slight decline. But that could be also because lots of orders were serviced in this quarter. So perhaps the order books aren't as strong at this moment as they could be. But there are other problems within the manufacturing sector, the shortage of raw materials, the increased price for raw materials, shortage of labor, etc., which might also be affecting productive capacity. So that could be another explanation for why the domestic orders line has dipped just slightly. But again, service sector orders up, touching 30 at the moment. And then for construction, again, a slight decline. Now, as I said earlier, I am not particularly worried about that slight drop-off in the construction sector for 2 reasons. One, the second quarter of 2021 was a bumper quarter for the construction sector. You know, there was a huge amount of activity that took place. And you can look at these lines, starting the dotted green line that represents construction, starting from the last quarter of 2024, you know, it recovered much before services and manufacturing. So we have had a huge amount of output in the construction sector in the last 6-7 months. That is one reason why I'm not worried. And the second reason I'm not worried is because we did some analysis of the construction sector activity for Manchester City Council, and there is a very strong pipeline of construction projects for most of the boroughs in GM. So, you know, construction activity will pick up again. And it also matches the national picture. So the national data shows that there was a very strong Q2, but then in July and August, there has been a slight tailing off in new orders in construction. Okay, so that's domestic data on the service sector side. What do we see when we split the data by the GM subregions? So again, just as a point, I classify the 10 boroughs of Greater Manchester into 3 groups. Greater Manchester North is Wigan, Bolton, Bury, Oldham, Rochdale. Greater Manchester South is Salford, Stockport, Trafford, and Tameside. And then GM Central is Manchester on its own. This is largely due to the response rates. So I roughly get 1/3 of the responses from Manchester, and 1/3 from the north and 1/3 from the southern boroughs. So that's the reason for classifying the data this way. We should be able to classify it further down by local authority level, just a matter of getting the response rates. But for now, let's look into Greater Manchester Central, which is that dark gray blackish line there, which is Manchester. Now, I made the point about consumer-led growth. And for me, this slide with these 2 charts actually provides further evidence for my view that the growth we have experienced is largely consumer demand driven. Why do I say that? It was Manchester Central that started recovering much earlier. You would expect that to an extent because of the concentration of retail and hospitality businesses when the economy started reopening. we saw that huge increase in demand. So Manchester started recovering much faster, and of course, it is in Manchester that we have the highest concentration of businesses as a whole anyway. So Manchester started recovering very fast. But then we know that at the beginning of this third quarter, we had a slight dip in retail sales. We have had a slight, tail off on further expenditure. And I think that has contributed to that slight decline in Manchester's central activity. That's true for domestic sales. It's also true for domestic orders. On both of those charts, there is a decline in activity levels in Manchester Central. That is not to say things are looking bad for Manchester, not at all. All it is a reflection of the present, in that the activity was significantly boosted by consumer spending. There's a slight tail off in consumer spending, so activity levels have gone down. But again, as I said, in the case of the construction sector, Manchester will bounce back. But what is interesting is that it's Manchester, Greater Manchester North, so the 4 or 5 northern boroughs, which are actually doing better than Greater Manchester South. That has been a phenomenon for pretty much all of 2021. And I think Brexit may be playing a part in that. So it is in the southern borough of Stockport that we have the airport, lots of internationally active businesses there, logistics, freight, etc., concentrated. Now, we have seen that exports have not picked up enough. We know that from the export documentation that we process. So that could be playing into why activity levels in Greater Manchester South are slightly below activity levels in the north. Okay, so Brexit could be having a part to play in this. Just bear in mind. But overall, there has been an improvement. If you look at Greater Manchester as a whole, there has been a significant increase in economic activity in the second and the third quarters. Okay, next up is international demand. 2 measures there: export sales and export orders. Both of those have gone up. In the 2 sectors, manufacturing and services, have both recorded an increase in export sales in this quarter. Particularly good news is the increase in services exports, which is extremely important for us. We do export a lot of goods, manufactured goods, but we also export services. And so to see that service line grow back to near 30 is actually extremely good news. That's on export sales. There has been an increase in activity for both manufacturing and services. When it comes to export orders, we see a slightly different picture. The growth in advance orders from overseas customers has improved, but only marginally. And when it comes to manufacturing, there is actually a decline, and it is a noticeable decline from about 17 to about 6. So that's 11 percentage point decrease for export orders. Again, it could be because lots of orders have now been serviced. But again, we also know that from European customers, there is still some hesitancy to make orders with UK businesses. Now, all of that could be playing a part. I do not want to build a whole lot of narrative around that decline. I think it might bounce back, but we need to keep a very close eye on it. A couple of things to bear in mind when it comes to international trade. Shipping rates are still very high. There are significant delays in the border even now. So there are difficulties in moving goods across the borders. And there is a shortage of raw materials. Probably that's the biggest impact now on manufacturing businesses. So perhaps export orders for the manufacturing sector have been weakened by that situation. But overall, it is not entirely bad news, because quarterly sales have gone up from overseas customers. Okay, so what is business confidence looking like? It's looking good for this quarter for the most part. So there are 2 questions here. One is the ability. It's a forward-looking indicator, business confidence. The first is on the ability of businesses like yourselves to maintain your revenues or turnover, and the second is on the ability to maintain profitability. So when it comes to optimism regarding the ability to maintain turnover or revenues, things have been fairly stable for pretty much all of 2021. More than 60% of you said that you are very confident that you can maintain your revenues in the first quarter, a similar proportion in the second quarter, slight decline, but it is about 58 compared to 61. So it is not a rapid decline. But again, it's that slight decline in that green area in those charts has been made up for by the yellow, the amber, which is basically you saying it will stay the same. So actually the number of businesses that have said that revenues might decrease or are feeling more pessimistic has actually gone down, and it's consistently been going down since the last quarter of 2020. So that is very good news. So business confidence in relation to the ability to maintain revenues are positive on the whole. When it comes to margins, actually there has been a pretty good pickup now. It's pretty much where it was in the first quarter of 2021. So what we saw in the second quarter is that there was optimism in the ability to maintain revenues, but when it came to profitability or margins, actually more of you were pessimistic. So nearly 60% or so said that actually you're going to struggle to maintain margins. That has actually changed now. So close to half now saying that you are confident about the ability to maintain margins and profitability. But we know that there are other factors which are going to affect this as well, particularly price inflation, the increase in raw material prices, shortages, etc. So all of that could have a part to play in this. But for now, in this quarter, very good news on business confidence, lots of optimism about both being able to maintain revenues and margins. So that, again, is a very good forward indicator for our economy. Okay. Cash flow and capital investment, and here is where things start getting interesting. So let's look at cash flow first. The data is broken down by sectors. Now we know that the manufacturing sector recovered the best in this quarter. So lots of export sales, lots of domestic sales, some good activity on advanced orders as well for the manufacturing sector. However, cash flow positions have actually dipped. And I think the explanation for this, it would be interesting here, the views of manufacturing businesses amongst yourselves, but my view is that there is now a lock-in of cash, because we know that there are significant delays in raw material delivery. So orders may have been placed, so money, working capital is stuck in inventory. That has not necessarily been realized. So there are delays in production. That could be a reflection of the fact that cash flow positions have actually declined in the case of the manufacturing businesses. But when it comes to services and construction, there has been a slight improvement in cash flow positions. Now, earlier I referred to kind of economic headwinds in relation to cash positions. So we know that deferred tax liability is due. The HMRC estimate for a deferred VAT and deferred corporation tax is close to 75 billion. And that has to be paid at some point of time. So deferred tax liability, as and when it becomes due for payment, that will affect cash positions. We also know that businesses that have taken out C-bills or the business bounce back loans, debt servicing is actually going to start again. So those repayments will also start. This is something I mentioned in the second quarter, and actually that expectation was more or less on the mark, because we haven't seen a significant increase in cash flow positions. You could argue that for manufacturing, for construction and services, it was fairly stable. Marginal increase, could be well within the margin of error. Whereas for manufacturing, it has actually gone down. So the expectation that cash flow positions will continue to stay under pressure was a right one, and I think that will likely continue into the last quarter as well. Now, of course, confidence and having the cash to spend affects the ability to invest in capital projects. So when it comes to the acquisition of plant and machinery or new equipment, clearly the availability of cash is going to affect that. And this is where we are very clear that business investment is still lagging behind. That's true pretty much in the whole of the country, clearly captured by the Greater Manchester QES. This is something we have talked about quite a lot, even in the previous couple of quarters. For the manufacturing sector, it's stable. For the service sector, again, it's fairly stable. You could say that there has been a marginal increase. It is only in the construction sector that there is no indication of a significant business investment. So overall, I think in the economy, business investment is lagging behind. Unless we have significant increase in demand and cash flow positions, we are not going to have that investment. And without further investment, we cannot really expand productive capacity. And another reason why investment propensity might be on the lower side is because capacity utilization is probably still below full capacity levels or optimum capacity levels. And what we know is that it's only about 45–46% of the survey respondents that have said that they are actually operating at full capacity. So nearly 53–54% of businesses are operating at well below full capacity. So that's another reason why there will not be substantial investment in capital projects at this moment. So cash flow and investment. And then, of course, the vexing issue of prices and inflation. Now, inflation has been a concern for quite some time. Couple of things that I want to mention here. The first is, we have seen this widely reported in the media that there is a shortage of pretty much everything. On the 15th of September, there was a news headline saying there is not going to be enough wine for Christmas. 2 days ago, I see a headline saying there is not going to be enough turkey for Christmas. I then looked at the US, and the US news media is also reporting very similar things. So there seems to be a general shortage of goods across the world now, and probably a little bit of common sense and patience as well. But please don't quote me on that. But the problem is, inflation is something that we have to deal with. CPI, the headline rate is 3.2%. It's a 0.7% increase in August, so monthly increase of 0.7%. But that actually compares August 2020. So when we compare August 2021 with August 2020, you do have a low base effect. Eat Out to Help Out scheme, VAT reductions for the hospitality sector, all suppressed prices, possibly in August 2020. So that's actually led to higher prices in 2021. That's one reason why the headline rate of inflation is actually slightly on the higher side. And then, of course, there could also be an element, another element to remind, which is that we still have those VAT reductions for the hospitality sector. So is the real rate of CPI 3.2, or is it close to 3.3, 3.4? That is debatable, but the headline rate is 3.2%, which is way higher than the 2% target for the bank. So inflation is a concern. Many businesses are saying that proportion has actually gone up. So more than a third of you are now concerned that inflation is going to affect your business. Other overheads, again, well more than a third. Financing costs, also a matter of concern. Raw material prices, actually, it is not as much of a concern across the board. But of course, when we split it into sectors, manufacturing sector is seriously concerned about both raw material prices, and the anecdotal evidence indicates the delays in actually the availability of products. And then wage inflation, labor shortages, again, widely reported. Pay settlements are another cause for concern. Now, I said that there seems to be a shortage of pretty much everything in every part of the world. That was not to downplay these concerns. We do have very serious concerns in the economy about shortage of labor, about supply chain disruption, the availability of goods, etc. But I think we have to bear in mind two things. One is that coming out of a recession, generally inflation does go up. That's a pattern we have seen historically. That's one thing. So just as a kind of a caveat to the high rates of inflation, we do see that coming out of a recession. And then the second thing is, obviously, we do not understand what is going on yet. Is it all due to supply chain disruption? Is it due to Brexit? Is it due to the long-standing impact of COVID? We do not know. But actually, we do need policy interventions at this stage. And so this data is actually evidence for enough policy intervention. We have seen some of that in this week earlier with new skills boot camps for HGV drivers, for example. So we need more and more of that type of policy intervention. But as a result of inflation, price expectations are higher. So the rate at which you would expect to sell the products and services that you offer, actually, it's going to go up. And we have seen it's fairly stable between this last quarter and this quarter. That could also be indicative of competition. So there is probably not enough scope to rise prices much more, but the rates at which you would expect to sell your goods and services has actually gone up since the last quarter of 2020. Having said that, the Bank of England is holding rates at 0.1%. I do not believe there is enough capacity in the economy to have for higher interest rates at this stage. And there is still some uncertainty in the economy, so I do not expect interest rates to go up immediately, but it will have to go up at some point in time. Okay, and then finally, the labor market data. So labor shortages, a cause for concern, absolutely. That is because more and more businesses are now attempting to recruit. And we have this slightly paradoxical situation where we have lots of employees on furlough, but many businesses are trying to recruit as well. So across the board, manufacturing, services, and construction, all sectors are trying to recruit more staff in this quarter. Good news for employment prospects. So the forward-looking indicator from the labor market data, lots of businesses in manufacturing expecting to add to their workforce in the next quarter. Services are fairly stable. Our construction is slightly down. That could be a reflection of the fact that the order books for construction is actually on the lower side in this quarter. But again, construction will pick up. Construction is one sector. If you look into workforce additions, the balance was close to 70. And we are saying there is a decline, but the balance is still well above 45. So it's not that it is bad news. There has been a quarterly decline. We know there is a huge pipeline of construction projects, and as a result, there will be huge employment opportunities within construction, and labor shortages will only exacerbate that. Okay, so when it comes to recruitment difficulties, again, this is an important issue for us. So firstly, the chart on the left, where are the recruitment difficulties? What types of occupations are we struggling to recruit for at this moment? Number one is skilled and technical labor. So particularly in manufacturing, in construction, jobs that require specific skills, HGV drivers, etc., might be included within skilled and technical labor. That's where we have the most difficulty. The second area where we have difficulties in professional and managerial services. That again has been fairly stable for some time now. But even the lines with clerical and unskilled professions, so admin professions and unskilled labor, the demand for those have also gone up now. So there are recruitment difficulties. Now, when I was talking about recruitment difficulties to the combined authority and some local councils last quarter, there was a bit of a challenge. They wanted to understand what was the cause of recruitment difficulties. And so we have had these questions for 2 quarters now. So this is the chart on the right. I just want to say one thing before I get into the actual data. Do not pay much attention to the actual percentages yet. And the reason is I have included these questions only in 2 quarters now, the second quarter of 2021 and the current quarter. So the actual percentages, there will be a bit of flux. But what is important is the trend. In both quarters, the number one cited reason for recruitment difficulties is the lack of required job-specific skills. It was 73% in the second quarter, it's now 58%, but that's the number one reason for recruitment difficulties. The second reason is the lack of aptitude or personality. And I have actually done a detailed analysis of the Kickstart data. As many of you will know, we are a Kickstart gateway operator. And when I look into the actual data, the reasons why some placements have been terminated, the reason why some young people who have obtained placements have actually left, etc., some of these issues are very strongly reflected in that as well. There are, of course, sectoral differences. So it's in professional services, it's in the more service occupations that you actually see this issue of soft skills, not necessarily in the highly skilled labor. So that's the second most cited reason. The third most cited reason in both the quarters has been the low number of applicants generally. That is surprising considering the number of employees who are still on furlough and the huge number of vacancies. And there are some very serious contradictions here. When it comes to some professional jobs, for every job, this is the anecdotal feedback that I have received, and again, it would be useful to get your views on this. For some professional jobs, for every job, there seems to be 50, 60 applications coming in. But when there are jobs in, say, logistics, in manufacturing, that proportion is actually much lower. So in fact, for every 3 or 4 jobs, there seem to be only 5 or 10 applications. So, no, it's not the 1:40, 50 that we see for professional services. So there seems to be a general lack of applications. That's a third cited reason. And then, the remaining reasons are pretty much stable there. So we do have this evidence now. It is our intention to include this question in the next quarter as well. So it would be very useful to get your views on an ongoing basis. But recruitment difficulties are real, which is why we need those policy interventions that I was talking about earlier. Okay, and then finally, this is in cooperation with our partners, Q Energy. We had some questions on net zero and low carbon, very topical in the lead up to COP26, but also in the growth plans for the UK and for the city region. It's green growth that is envisaged. So net zero and the transition to low carbon is actually extremely important. So we had some questions on that. So what are your views on this? So one of the questions that we had was on awareness. Sorry, that's a mistake. One of the questions that we had was on awareness, and then what measures have been adopted. So on the awareness point, this is surprising. Now we know that the UK has ambitions to become carbon neutral by 2040, 2038, 2 years ahead in Greater Manchester. But only 45% of the respondents have said that they are aware of the UK's net zero ambitions in detail. The remaining 55% are not that aware of what the actual ambitions or the goals are. So that's actually interesting. However, there seems to be action that is being taken. So irrespective of whether there is awareness of the overall goals for net zero and the overall ambitions for net zero, there does seem to be clear action being taken on the ground. So the question that we had was, what measures have you already taken, which is in that light orange, and then the darker orange, measures that you expect to take in the next 12 months. So the number one measure is the switch over to LED lighting, smart heating and ventilation controls, etc. Very common these days. So that seems to be the number one reason, very helpful for the transition. The second most cited reasons are switching to green energy and then turning down appliances at carbon intensive periods. So there are lots of measures that you are actually taking, and that is the key element here, which is why we wanted to explore just the overall ambition awareness and also about the measures that are being undertaken. So on the ground, there is actually a lot of activity that is taking place to facilitate that transition to low carbon and net zero. We also then asked, what are the motivations? Why are you driven to make those changes to net zero? And of course, what are the barriers and challenges? So when it comes to motivations, the number one reason is consciousness and awareness about the environmental impact and sustainable development. So it is green growth, it is about sustainability. It has been a very important topic for and now made all the more important during the COVID disruption. But that's the number one reason. It is achieving environmental, social, and sustainable development goals. The second reason is, of course, efficiency. Having LED lighting is cheaper. Having smart heating controls is cheaper. Having energy storage is cheaper. So these are actually good things to undertake. And then, there is also procurement. So increasingly, especially for public sector procurement, social value, which covers low carbon and net zero, is an element that drives procurement. So again, it's a very interesting elements on that. So in terms of barriers, this is one area where I'm actually not surprised. I do apologize for changing the slide over. This is an area that I'm not surprised about. The lack of information about carbon measurement, carbon reporting, and what measures can be undertaken is a number one challenge that is facing businesses in making that transition. And then, of course, the second reason is the high upfront cost for solutions and services. Other reasons around complexity, the lack of transparency from energy brokers and intermediaries, and in some cases, a small number of you also saying that you're getting poor service levels from your existing providers. So these are challenges. This is an issue that we have picked up, especially in the context of the clean air zone, where we are actually forced to make some transitions, especially for HGV vehicles and so on. Do we have enough spending capacity between now and the next of April to actually make that transition for the large fleet of vehicles that fly in Greater Manchester? But that's a separate issue, but it is important for meeting some of our ambitions for net zero and carbon neutrality. Okay, so in summary, the Greater Manchester Index has improved. It now stands at 31.9, 1.5 points up. We have had an increase in domestic demand and international demand, so sales have actually gone up. The decrease in consumer spending and the lack of business investment has actually started softening the rates of growth. The one thing that we are slightly worried about is the end of the coronavirus job retention scheme on the 30th of September. We do expect a slight uptick in unemployment as a consequence. We do have some inflationary pressures that we have to deal with, labor shortages, raw material prices, etc. And then the transition to net zero, digital transformation, and upskilling. Those are issues that are actually going to create new opportunities for green growth and for post-pandemic recovery. So there is a lot of good news in this quarter's QES. There are a couple of economic headwinds. We'll keep a close eye on it, and then we will report back to you in the next quarter. With that, I'm going to hand over to Chris.
Okay, thanks very much, Subrah. Again, hugely comprehensive and very slick presentation. And again, as we go through where we are post-pandemic with Brexit and all sorts of things happening, there's sometimes more questions than answers that come out of this. But I think there's nothing better really than being able to drill into some of this data and just make a bit of sense over what's going on out there at present. Because I think if you read any newspapers or what's the news at present, you'd just be scratching your head wondering what on earth's happening next. Got a bit of sanity out of this morning, a bit of clarity. So thank you very much. We're just going to give Subrah a chance to draw a bit of breath. And I'd like to introduce, as I mentioned before, the founder and CEO of our sponsors for this quarter's survey, Vijay Natarajan of Q Energy, and dig a little bit deeper into the results from the survey on the subject of net zero. So Vijay, thanks very much for joining us this morning, and thank you so much as well for partnering with us on this. And we're going to do a little bit more work, aren't we, over the next few weeks on the survey and some of the things that come out of it around net zero, because this topic isn't going anywhere anytime soon. And there's obviously a lot of focus and coverage of net zero, especially in the lead up to COP26 in November, and a lot of businesses are now wanting to look at doing things differently. So how's this impacting on you as a business? Because obviously a lot of what you do is directly related to encouraging businesses to do things around net zero. I presume you're getting busier.
Yes, thanks, Chris, and thanks to everyone. And it was a nice presentation to see interesting data from the QS. Yes, I mean, there is increased focus on net zero in the last few months. And as a business, so we are Q Energy, we're based in Manchester Science Park, and we've been doing things, building products around smart energy services in the last 3 years. But we could see that there is an increase, and we are in inquiries, and we are getting busier. But still, you can see there's more focus from large organizations and public sector to demonstrate commitment to net zero and take actions. And when you talk about the SME and the domestic sector, it's still the early adopters who are making the changes and adopting new measures. But obviously, this is what we are here to understand. What are the challenges from the businesses and how we can kind of overcome them.
And I guess looking at the QES results, it's obviously there's still a majority of businesses that aren't clear on the UK's net zero ambitions. Then that obviously creates problems in getting them to understand targets. How are you finding it? What you're doing? You mentioned there about big businesses and SMEs and smaller businesses. What are you doing to make sure that those smaller businesses understand, what is coming to them and get them on this road to net zero?
Sure. So obviously we take a data driven approach. So it's about starting with the data, understanding their business, and trying to create a net zero plan for them. So obviously we've been trying to do this in a more detailed way, and including site surveys and things like that. But what we have done is we have now launched a net zero tool, reporting tool. So this, we made it as a web tool. It's free to use. So businesses can feed in their basic information about the business in terms of energy use, business travel, and they can get outputs as a net zero report for their business, showing their carbon emissions and based on the targets they choose. So then it'll give them annualized targets of how much they need to do for achieving net zero. So we follow it's built based on the United Nations guidance and the Science-Based Targets Initiative methodology. So that we have done. So we are trying to now get businesses to try it out, and so that they can get quick results and outcomes, just to familiarize themselves with what they need to do, and then following on, we can do detailed assessments.
And looking at the results again from the QES about why businesses are doing it, I mean, it's interesting to see the environmental and social benefits are there as being the main motivation for businesses. And I know looking, back over the years when we've been talking about some of this stuff, businesses several years ago were not that interested until you mentioned the fact that there's cost savings. But obviously it seems as though that sort of momentum shifting now, isn't it, into much more, it's the right thing to do, but it's got to be done. Are you finding that from businesses, and do you still get people that are reluctant to begin to take this seriously?
Yes, I think we are seeing the cost benefit and the carbon benefit are intersecting now. And as you can see, buying energy at carbon intensive periods is more expensive than at other times. Last year, the prices even went negative. For example, just talking about the energy, prices went negative, and then now prices are going up. So things like that. So it is linked to how much renewable energy is out there in the system and how we can use it. So there is an intersection that is happening, and hence the way we are approaching it is you can achieve net zero at the same time you can reduce costs, and we want to provide them the tools to kind of track the impact on an ongoing basis, on a real-time basis, at the same time get monthly reports and things so that they can demonstrate what they're doing in terms of actions and where they are with their targets to their stakeholders.
And obviously, like I said, going back, every time you open the newspaper, read it on something online, or look at the news or whatever it is, energy-led stories, whether it's filling up your car or gas prices last week or one thing and another, they're beginning to dominate now, aren't they? And I think that will only increase as we go into November. Of course, in Greater Manchester, we've got some very challenging targets to achieve net zero ahead of other areas in the country. I'm just wondering, in your view, and final question really, is what's the single biggest challenge facing us in Greater Manchester? We move towards those targets, and how do we solve it?
Yes, I think there are Greater Manchester is ahead on a lot of these things, and there are a lot of initiatives happening from Greater Manchester Combined Authority, and there's also existing work that has been built up. Like there is a low carbon network in Manchester where there are about 400 low carbon technologies, energy efficiency solution providers. So that is there, and then you have your free business support to help businesses adopt these measures. But then the challenge is the data and how we can bring them together, because at the moment all the data sits with it's all fragmented. It's either with the energy suppliers, some of the data, energy brokers, and then there is some of the data not documented. So this is where we have the challenge. We need to bring them together because the services are there and the support is there. But then for these, how can we get this data to these initiatives so that these businesses can benefit? For example, we had a chat with Business Park in Rochdale a couple of weeks ago, and the Business Park manager, and they wanted to do things, but then they were not aware of it at all. So maybe if you talk to a business park in the center of Manchester, maybe they are more familiar with these things. But then when you go out, so it's about getting this message and the support that is available out there to the wider areas of Greater Manchester, so it reaches everyone.
Okay, thank you very much, Vijay, for that. And I guess, like you said, it's getting that message across in the first instance, as we've seen from the results, making people more aware, but then also now perhaps more than ever before, being able to be in a position where we've got action that we can actually start to point people towards and support there to take this forward, because this isn't going anywhere anytime soon. It's going to be around for a lot longer around this, and it's great to have your support for this survey. So thank you once again, Vijay, and everyone at Q Energy. And like I said, we will be doing some more work, some follow-up work on this whole net zero issue over the coming weeks and months. So like I said, we'll be returning to this on a very frequent basis. Vijay, thank you so much.
Thank you very much.
Thank you, Q Energy, for this. Just in the chat box, there is a little a message from Lewis Hayward at Q Energy about a net zero report and businesses availability with a link there. So if anybody does want to have a look at that, the link is there in the chat. Also in the chat, Subrah, I'll bring you back in. You've just replied to John's question there. John Jones asked a question about how do we, or are we comparing as a region to other areas in the country, and you've just sort of deferred that because we are victims of our own success because we're ahead of everyone else, so we can't really say what's happening in Q3. But for example, Q2, how did we compare to other parts of the country?
Yeah, so we have to bear in mind most of the 53 chambers are running this. Some of them are in rural areas. Some of them are in the in large local authority areas, and some of them are city regions. So when I compare our performance with like for like, so if I compare our performance with Birmingham or Leeds, more or less on par. We do better than the Northwest average in most quarters, particularly in services. But there are one or two areas within the Northwest that do have a strong manufacturing basis in terms of manufacturing sector performance. In some quarters, they do slightly better than us. But when we compare ourselves with the national average, we obviously do better as well. But I can send more details to anyone who's interested, but it will have to be after the 8th of October. Okay, so thanks very much, Subrah, there. And like I said, it is a genuine answer because nobody else got their Q3 results out as quickly as we can turn it around here, which is always a very impressive feat, and especially with 480 responses this time around, a huge response rate, which is absolutely superb. So thank you very much, Subrah, and your expertise once again, both in making sense of everything that's going on there. But again, it's got to be said again, this is completely coming from businesses. This isn't me, Subrah, anybody else putting any spins on anything. This is coming directly from evidence from business there on the front line. So that's hugely important. So that just about wraps things up. And again, we just crept over by a couple of minutes, but we were a little bit late starting. So thank you for everyone for attending today. Subrah, for your work as well, for Vijay and the guys there at Q Energy for supporting this. As I said, look out for further work that we're going to be doing on the net zero topic. It is a big thing. Now we've got sort of coming out to the back end of COVID, whatever's going on with Brexit and all the other stuff, the net zero has been around all the way through this. May have been hidden out of sight a little bit by some of the other stuff that's been happening, but it's right back on the agenda now, and we'll be doing a lot more on this in the future. Just a couple of things. Look out for the events brief that will be hitting your inbox
probably in the next few minutes. Actually, it's going out a little bit earlier than normal today, so look out for that as upcoming events that we've got. I just want to mention one we've got next Wednesday morning. There's a new police and crime plan being put together for Greater Manchester, and we're going to be hosting a special session looking at business crime and asking businesses what they want to see in the future as part of that new plan. That will be fed directly into the team at the combined authority that is putting that plan together on behalf of Greater Manchester Police. So this is a subject we've not really touched on for a couple of years, but again, a new chief constable, there's a definite different feel in the air when it comes to policing issues in Greater Manchester, and we're going to be playing part of that. So if you've got any views on that, or you've been impacted by business crime in any way, shape or form recently, or you want to see something happen, that event, there's a link there that Leon's just put on in the chat for that next week. So that just wraps everything up. Thank you once again for your time. Thanks everyone for being involved in this morning, your questions and everything else. Thank you for your support. Carry on. There's going to be some interesting times ahead, isn't there, always? But I think over the next few months and maybe the next 12, 18 months, we're probably going to see all sorts of things coming out the woodwork, and pretty quickly as well. We only need to see, this time last week, who'd have thought we'd be having petrol queues and forecourts running out of fuel. It happens overnight. We won't go into the reasons why, otherwise we'll be here for another hour. But these things come out pretty quickly. We're here to support you. We're here to listen to you. We're also here to help as well. So thank you very much, and enjoy the rest of your day and enjoy the rest of your week. Thank you.